Good afternoon, friends and traders. Welcome to the live Q&A. I'm Dan Hodgman, sitting down with Michael Patak. Michael, how are you?
I'm doing well. How are we, Danny Hodgman?
Can't complain. Markets are moving. We got some action there. We got a lot of people already joining in here. So I want to come out right away and say any questions you have, drop them in the comments. Those will be fed over to us. We're going to get through as many questions as humanly possible. We had a bunch already submitted ahead of time, so we're going to dive into those. We got a lot of big topics to discuss here today. So we're going to get through that stuff. So make sure you're giving us questions. Let us know what you're thinking, and let's have some fun here. So Michael, before we get going, you've been trading a lot lately.
I've been trading a lot lately. Yeah. I've been trading a bit of the S&P and a bit of the NASDAQ. Got the dual screen set up, like I'm sure 95% of every trader has. Just enjoying the moves. It's been a little quiet, but volatility picked up on Monday. It was crazy. A couple of weeks ago, volatility was there, but overall, it's been a nice trade.
Felt like we were going to get a little start of a correction on Monday, and I mean, that didn't last. We covered yesterday like it was nothing.
Yep. It's a typical, hey, we're going to go into correction territory. And then next thing you know, the next day it rallies and makes back everything that it lost.
Right. Okay. Monday, Dow goes down 900. You were a Dow trader. You were in the Dow pit. Yep. How many times did you see Dow down 900 back in your days of the pit?
2008. It was, I remember it was like, I forget what it was trading back then, but it was like 7,800 bid at 7,900. That's 100 ticks wide. That was nuts. And I remember people leaving the pit being like, I can't trade this. Well, people say I can't trade that if it's too much volatility, and people say if they can't trade if there's no volatility. So as a trader, you got to learn to adapt. You just got to be smart if you're not seeing it and shut it down. And that's a big key. But yeah, trading the Dow, those swings, 2008 financial crisis.
Pretty wild. And now we see 1,000. We've seen it multiple times this year. Yeah. So one thing I didn't mention that I want to make sure everyone knows, this is being recorded. So if you can't stay the whole time, it'll be on our YouTube page. You can find it anytime you want. You can even filter through and ignore some of my ramblings at times. Mike, we've had a lot of changes happen. We've had a lot of things going on here at Topstep. I think we want to touch on the first most important one right now. We've updated this withdrawal policy. And I know there's a ton of questions around that. So we're going to try and touch on everything we can on that. Michael, can you dive into it a little bit?
Yeah, the withdrawal policy is pretty straightforward. You know, we basically want to see always performance. Excuse me, sorry. There's always performance is in our DNA here at Topstep, where we're always focusing on helping traders perform at their best. So we changed our policy up in a way that we want to see you have 5 winning days. You know, this is cumulative 5 winning days. It doesn't have to be in a row, and it has to be at least $100. Why do we do that? Well, I remember when I traded after winning days was a really good moment to take money out. I had a pretty good schedule that I would take money out once a month. But what we're doing here is basically saying after 5 winning days of $100 or more, you're eligible to withdraw. And you're eligible to withdraw up to 50% of that. And why 50%? Well, in the history of what we've watched traders trade and just understanding how professional traders trade, you have to be able to manage your stack, so to speak. And if you take out too much, every trader has a cold streak. What if you take out too much and you get that cold streak, then you blow up your account? Well, now you're back in the combine, or you're back kicking yourself in the butt being like, man, I lost my funded account. We're trying to keep people on funded accounts. And there's a skill that people don't utilize too much, especially if you're in a brokerage account and you've never really had too much success. You've deposited more than you've withdrawn. Withdrawing is account management. Building your account, taking withdrawals. Building your account, taking withdrawals. These are so important. Why? Because we're here to make money. We're not here to just trade. So that's what we're really incentivizing here. We're trying to incentivize traders also to stay in their funded account. You can withdraw 100% of that account. So don't think that you can't withdraw 100% of that account. You can withdraw 100% of that account above your starting balance and call it a day. Move on and trade in a brokerage firm or trade with your brokerage firm or whatever. Come back to the combine. I don't know why you'd come back to the combine, because I think you're trading really well and you're a funded trader. So the point is withdraw up to 50%. leave yourself some room, give yourself some, hey, oh, I'm not seeing the market right now, and I'm not freaking out because I still have a good amount of money in my account. And again, we've seen people take almost all their account and leave a little bit in there, and then you don't really weather that. And then we've seen people that have never taken a withdraw, and we try to encourage them to withdraw, because again, you're here to make money trading. And that's what we're here to do, is help professionalize your passion. You're trading at the prop firm level. We're excited about having you at that level. We're excited about having you on that funded account. Let's build that funded account together, because the prop firm makes money when you make money. That's the only way the prop firm makes money. And we're excited about this policy in that way. And we'll take questions on that if we want, if I didn't cover anything. But that's how we look at the policy. Hopefully it's looked at as, I'm here trading, I'm here to build my account. This makes sense because now I can manage my account. My account management skills are going to be improved.
Absolutely. And just a couple of things to add into that, right? If you're trading in a pro account, you transition and you start with that $5,000 starting balance. Doesn't mean you don't have access to that, right? That's another $5,000 of risk that you can trade. As you grow that account and you hit those days, you can still withdraw via 50%. We want to see traders trading. It's as simple as that. I don't think there's many questions around it. We're in the business of funding traders. Their traders' success is our success. And that's why we want to do this. We want to work together. And that's what the whole combine is about. It's about education, professionalizing you like a trader. I can tell you, any trader I know out there that's getting into this, they're not withdrawing even 50% of that balance. They're keeping those withdrawals relatively small until they grow the account. And that's what it's all about. We want to see you guys grow the account, and we want to help you guys get to that point.
I think that's a great point. And the last kind of point I'll make, we paid out millions last year, multiple millions of dollars, and we paid out multiple millions of dollars. I believe it's almost multiple this year already. We know how people manage accounts. We know the people that pull out a little bit, build the account, pull out a little bit, build the account. These are traders that stay on accounts. These are traders that pay themselves, and they are getting closer to the life that they're aspiring to achieve. And we want trading to help those traders get there. So all that history, all that research, all that understanding of how traders withdraw and then what happens to their account afterwards, we're here to help professionalize your passion. We're here to help you get in the best position you can to grow that account and withdraw. Grow that account, put it in your pocket, grow that account, put it in your pocket. And you're going to see your personal bank account grow. And that's kind of the goal here. I mean, it's not kind of, it is the goal. And then the overarching goal is to really professionalize your passion. I know I have a passion for trading. I know I've always taken withdrawals. I know in the early days, I did not take withdrawals because I blew up three $30,000 accounts. Then I went on a sim with a prop firm, and then I proved myself. And then after I proved myself, I had to build the account. And then once I build the account, I then said, all right, I'm going to start taking money out. And I would take money out and say, this paid for my education. This paid for my books. This paid for my monitor. And then you get to a certain point where all your stuff's paid off and you keep pulling money out. That's a great world to be in. That's when you become a career trader.
Awesome. Thanks for clarifying that, Michael. And if you guys do have questions, those of you that are funded, you can reach out to the risk manager. You can email into support@topstep.com. You can also call in. We don't want to spend the whole time we're sitting here on just that. We got a ton of questions that came in. One that's coming in pretty interesting, like right now, and I've seen this in a couple different places, is the question about this idea of intraday drawdown being a new thing in the funded account. Just so we're all clear when it comes to a lot of this stuff, when you're in the funded account, your drawdown, it doesn't move throughout the day. It stays right there, but it is looked at intraday, whereas at the end of the day, something like the weekly loss limit, if you go past your weekly loss limit in the middle of the day, you do have the ability to bring it back up. But once you're live, that's not the case. We're going to watch that in the middle of the day. All right. So we have some exciting things happening too that I'm excited about. I think a lot of traders are excited about.
Correct.
Coach
Should
T.
I do the drum roll?
Well, I already hit it. Coach T.
Yep.
Talk about it, Michael. What's next? What's going on with it? Where are we at?
Okay, so Coach T is very cool because the reason why is we are in the infancy of Coach T. We're building it out. We're getting feedback. There's some other phases of Coach T that we're going to be rolling out that makes it much more exciting. There's the basically you should be using Coach T as the first part, or at least understanding it's there to help you. It's there to help you with the analytics. It's there to help you with the feedback. It's there to help you with the practice account. It's there to help you with alerts. And all these things are our way of saying, all right, we have your trade data in here that we help you. You want alerts here. Okay, great. You want feedback. You want your data as far as personalized analytics, all that kind of stuff. And we're going to be making it cooler and cooler, because our goal, again, just like everything, is to professionalize your passion, keep you advancing into the program. And then when you're funded, keep you growing that account and taking withdrawals, put it in your pocket. Again, this is everything we focus on, and everything we're passionate about is this type of stuff. So Coach G is our way of saying, hey, everybody every professional of some sort in some area has had a coach or a mentor. So anybody who's done it without that, you have a mom, so you're going to thank your mom. So there's somebody there that's had your back. So that's something that we're really proud about, and it's just going to becoming more to life as we kind of roll out more of the features. So that's really exciting. Utilize that. Understand what your risk to reward is. Understand all the different metrics about how many losers in a row you have, that you need to shut it down, and have a trading plan that has your own personal loss limit in. All these things are key. Trading is not just slap it on and cross your fingers. That is possible. You may have one great trade, but if you want to be consistent, profitable, you have to be disciplined, and you have to have a plan, and you really have to have someone or thing give you some feedback to help you understand what you could work on, what you're struggling on, and what's your strengths.
Awesome. Thanks for diving in. That Coach T is an awesome thing. Make sure you check it out. Right now, I know it is not currently available with the Swing account and the FX account. We are still beta. We're still learning. We're still building and developing. Definitely the goal is to make sure it's accessible to everyone. Good things take time, right? 100%. Speaking of things that have taken
patience, Danny.
Patience. Now, speaking of good things that have taken time, another one I'm really excited about, and I know a lot of people, I have a lot of friends that are traders that are not within Topstep that use this platform. I have used it. I've talked with the company a lot. I'm really excited about this new introduction. Michael, what is it?
TradingView.
It's like a social media for trading, essentially. Yep. There's so much to it. It's so freaking cool.
You can instantly start working with somebody on what you're seeing in a chart, sharing that chart with them, and having this social interaction. To me, that when you find a certain, there's a lot of noises out there, but if you find a certain individual or group, TradingView is an incredible platform to utilize. Both Danny, how you and I talk, we'll get on Zoom every now and then with a couple other traders and say, what are you seeing? What's setting up? What levels do you have? All that kind of good stuff. So TradingView has all this built in. TradingView and Topstep are now working together in a way that you can continue on your TradingView platform and be evaluated in the combine, be trading on a funded account, be withdrawing on your funded account, be still communicating and socializing with everybody in TradingView. And it's a huge community. So there's such a cool analytics and other things that it provides that you can really customize as far as your screen and your charts and all that kind of stuff. It's right there, and it starts off free.
Awesome. And Michael mentioned it, a lot of traders, they're looking for some sort of community like that. And this is a great place for it. And I know we're fortunate that we can hop into a video chat and sit and trade for hours together, because we kind of grew up in the trading world and we have connections. Not everyone does. So TradingView is a great place to look for it. I do know there's a bunch more questions coming in on this withdrawal policy. Just a couple things I want to touch on. It's just 50%. You can withdraw up to 50%. And you can do that after having 5 profitable days. They do not have to be consecutive. You don't have to trade 5 days a week. The whole point of this idea is when you get to the live funded accounts, you are a professional prop firm trader at that point. We want you to be trading. You made it there for a very specific reason. You've proven to us you know how to trade. All right. So we just want to see profitability so that you can continue to withdraw. If you're struggling, the last thing you want to do is pull out money while you're in the middle of struggling.
I've never done that before. I mean, if you're struggling, last thing you want is your account going lower by pulling money out. So the incentive here is focus on being a winner. Focus on being a winner, having a winning day, putting another winning day together. I have a losing day, put another winner day together. I have a losing day, I have a winner. You get to 5 winning days, take money out. you don't have to, but take money out. Take up to 50% out. I want to call it a day. I want to be done and close my funded account. Take 100% of your profits out at that point above your starting balance. This is all your choice and your free will to do. And if you think about it, there are competition out there that says you can't withdraw for 30 days. Okay, you can't withdraw for 15. Well, sure, it's an arbitrary number. But what if you just drove somebody to performing a little bit better than just putting in the time? So if you have them focus on, hey, push myself a little bit. If you can't have 5 winning days in a month, then I think you are in a tough spot as far as, seeing the markets and things like that. So I think when you look at the 5 winning days, you got to look at it as this is focusing on being a winner on my trades. Do not have to do it every day. Nobody's going to be a winner every single day. So it's basically saying, put up some winning days, take money out if you want. Put up some winning days, take money out if you want. Close your account, take all the money you want out of that account above your starting balance. So it's really there, again, to help those that really are here to professionalize their passion on the funded account. It's here to help you build your funded accounts, here to help you manage, again, the skills that you need to have account management. Again, account management is not only risk and handling losers and all the things that go into that, it's also handling how you're going to pay yourself. Because you got to almost create a whole new level of thinking. Okay, I got a funded account. I'm just going to grow it to $1 million. Well, no, you're not. Because that rarely happens where you just grow it to $1 million. You can grow it over time, but you need to pay yourself. Because if you build it up, then you want to be able to take money out so that, again, if there's a cold streak, you either don't lose your account or at least you've taken money out. Pay for your car. Take $5,000 out. Pay for your car. You have $10,000 in your account, take 5 out. You have $5,000 in your account now, you're a good trader. Keep trading. Put up another 5 days. Take 2,500 out. Even if you scratched and had a couple, 5 winning days and then 5 losing days, and it comes out, you can take 2,500 out now. So the 50% is there. So you always have a cushion. Reserves are so important in trading. I think you guys have all had a personal brokerage account, and probably you know that if you take money out of it, then it's less money in there. You kind of change your style, Danny. I mean, that's kind of,
you do.
You get a little timid, you get a little nervous. So if you keep a good amount, which is 50% of your account in there, I can almost put a little wager on it that your confidence will not deteriorate. Confidence will stay strong, and you'll build that account even if you catch a cold streak. Catch a really long cold streak, that's a little bit different, but we're all good traders at the funded level that we picked up some skills along the way that had us growing accounts in the combine, and we want you growing accounts at the funded level.
Awesome. Thanks, Michael. And a couple places that you guys can look into some information on this Coach's Playbook this week. This kind of came up. We talked about it a little bit, and then the Limit Up podcast coming out tomorrow. Jack and I actually kind of dive into the idea of what it takes to be successful long-term. We discuss how we withdraw, how we do it on our own accounts, right? Mm-hmm. So check those things out. And like I said, any more questions on that, please don't hesitate to reach out. Risk management. If you're a funded trader, you can contact our support at topstep.com. One last thing that we got to touch on that's pretty exciting. It's our biggest one yet. What do we got, Michael?
Happy birthday to you, Topstep.
Happy birthday to Topstep.
Yeah. So we have our birthday campaign coming up. July. We are turning what is it again? 9?
We just talked about this 9.
I have 2 kids and one on the way, and I don't talk in months anymore. I'm like, that one's 1, that one's 2, and we got another one coming up. So yeah, so 9, we turned 9, very, very cool, very excited. And as pioneers of the trader evaluation to earn funding, we're so proud of everything we've done. As you can see with the withdrawal policy and some of the focus on funding, we care about keeping people at the funded level. We paid out so much money we processed so much money because traders have put up that money, and we processed that and sent it out. Our focus now is not to kick you back into the combine. If you got to the funded level, why do you want to go back to the combine? Let's keep you at that level. So that's the win-win. So 9 years of building the evaluation, building out the dashboard, building out partnering with certain people, certain companies, building an incredible, talented team at Topstep that we're so proud of, that accomplishes everything that drives towards our mission and vision. And I mean, I don't know what I'm missing now, but it's been a long, exciting road. And we're just really proud that we've been the pioneers of it, and we're really proud about what's in the future of what we're doing. So 9 years old.
Awesome. Thanks for touching on that. Pretty wild. 9 years, almost into double digits. Excited to see where we're at in another 9 years.
Yeah,
All right.
It just really quickly on that. It took a couple years to get it like where we really started building traction. I think anybody, there's a lot of entrepreneurs here, a lot of self-employed, a lot of gig folks too that do stuff like that. So, it takes a while, when you first start something to grow. So we're really proud that the company keeps expanding its reach and just everything we're doing as far as technology and team.
Awesome. Thanks, Michael. All right. Well, we're going to dive into some of the questions that got submitted earlier. I want to make sure we touch on those, but keep coming with the questions in the comments here. Michael and I will be on for about another 20 to 25 minutes. If we don't get to your question, don't forget, I am live every day at 3 p.m. Central Time. John Hoagland is live every morning at 8 a.m. Central Time with some more live streams to continue to come. So if we don't get it today, do apologize, but we will continue to be doing these, and you can always ask those questions while we're live. All right, Michael, one of the most interesting questions I think any trader gets is, how'd you get started?
How did I get started? I jumped right into the markets with no experience and a little bit of capital. I mean, I had a good amount because I had a vending company and an entrepreneur for many years. So I put 30 grand in the account. Hey, I'm going to do penny stocks. And I blew that up. So that's how I got started. I did that a couple times. I think if you do it more than a couple times, it's insanity. But I lost three $30,000 trading accounts. That's when I'm like, hey, I love this, but I'm completely out of money. I had to sell my vending company to pay for my last $30,000 account that I blew up. So I'm entrepreneur, no company lists at that point. And then moved to Chicago, got with a prop firm. They put me on a simulator. I had a $300 daily loss limit and I had a $300 daily average that I needed to put up, much tighter than what we have right now. And once I proved myself there, then they opened up the count, 50-50 profit split, not 80-20. So that was my learning. That was my baptism by fire in the beginning. That was my learning the importance of a simulator and building a strategy and a risk management foundation. And then I got out of that contract with the prop firm, took that money and opened up my own brokerage account. Started trading on the floor, bought a seat on the trading floor. It was like 20 grand at the time. It wasn't hundreds and hundreds of thousands of dollars. Danny's dad has some full seats. A lot of people have these full seats down there. I bought a seat that I could only trade in one pit. That was a Dow pit that Danny mentioned. Traded my own capital, learned from others. I had to wear a tie. Everybody had to wear a tie on the trading floor. So anybody that you could touch with your tie was considered your trading buddy, and you would talk shop with them. That was all really, really exciting. And that's where I started on the bottom step. And then I eventually moved to the top step because I traded bigger and I traded more, I'd say aggressively, but also more disciplined. There's a lot of people that came in there, boom, they walk into the pit, they blow up their account, they're gone. I don't know if it's a second mortgage or just their inheritance or family money or whatever, but you saw a lot of that. And I was around good people that taught me discipline. So that was the quick and easy story. And I always traded the Dow, and I've always traded on screen since 98.
One of the few.
1998.
All right. Couple just simple questions here. What are the fees associated with becoming a funded trader?
Well, there's a combine. You pay a monthly fee. If you have break any rules, you can reset your account. So those are the fees that you pay for. Once you are funded, there is a pass-through of data fees. The exchange charges a data feed. The CME charges a data feed. You're considered a professional trader, and you pay for that data feed for that.
Awesome.
Other than that,
Thanks.
at funded level, there's no cost.
Thank you. Speaking of getting to the funded level, what are the steps to be a funded trader?
You gotta have discipline. You gotta, just like it's like you have to have it in this business, and you have to have it probably in a lot of businesses that you take a lot of risk or that opportunity is limitless. So to instill that discipline, we have loss limits. We have loss limits to say, stop at $999. Don't hit 1,000. Don't hit 1,000. Stop at 90. There's a lot of confidence you get in yourself by stopping at $999 and the next day putting up $800, the next day putting up $400, and now you got $200 positive in your account, and you got yourself out of the hole. So that to me, you got to have the discipline. That's key. You got to be consistent, and consistency counts with individuals that just pop an account and then, hey, I'm ready to advance. Yeah, we see that. There's a consistency that we're looking into, and we want to help you be more consistent, because I hear traders all the time. I had a big winning day, and then Danny, on the trading floor, the worst thing you could do is have a big winning day when you first start trading. Why? Because then you chase that winning day, and then that winning day becomes all gone, and then you now blow up your account on the downside. So I've seen that a million times. So discipline is key, consistency. Whether you're consistently wrong, fine. At least you're going to know what you need to work on. Hey, I'm consistently wrong. And I see right here, after 3 losing trades in a row, my 4th losing trade is massive. Maybe I should stop at 3. And we have Coach T to help you out on that.
My limit is 3
it'll
losers.
alert you after that. So these are all things. You got to use everything. It's like going to school. You get the most of what you put into it, or something like that. So I think you get the most of what you put into anything when you have people around you that are support system and opportunity that's sitting right in front of your face, whether it's to be the starting shortstop or whatever. It's up to you, but you got to have these skills built. And the main skill is discipline. The next one is consistency, and you will get profitability once you get those 2 in good working order.
Awesome. And just so everyone knows, if someone says they're a trader, ask them to show you the number 3. You saw I did it and Michael did it as well. This is 3 in the trading world. This is not.
Trading floor traders. Yeah.
This is not. This.
Yes.
Anyhow, I digress. This one I thought was a really interesting question. I don't think it's something we talk about, but how much training is provided and education is provided in the trading combine, Michael?
Okay, so what we got to get out of Topstep is the facts. We are experiential learning. So when you are in Topstep, you are trading on a real-time simulator. You are trading really no different than if you had money on the line. Now, you may not have as much money on the line, but you still have a little skin in the game, and you want to take what you're doing serious. So the training we have is the rules that keep you instilling the discipline. Again, I'm going to go back to instilling discipline is what a lot of these rules are. They're risk management rules. So every trader should have risk management rules. You should have your own loss limit. If you have a $3,000 loss limit, you're in the 150K, put yours at 2,900, put yours at 1,000, put yours somewhere that is yours. And then that is a level of training. They're setting up a trading plan that Coach T helps you do. That is a level of training. Everybody should have a trading plan. I know when I started a business, both in the vending world, I had another business in the gaming world, and then Topstep, and then before Topstep, I had a prop firm. I had a business plan for all those. And remember, your business plan isn't just inked and it's done. We can adapt our business plan because the markets adapt. If you sell a product and it doesn't, you can adapt the product and things like that. So having a trading plan is training. We have YouTube videos. We have market forecast in the morning. We have our weekly blog. It's called the Weekly Kickoff. When you get the Weekly Kickoff, check it out. Tap on some of that content. At least digest
daily
it.
blog articles.
Yes. Digest it. Just get an understanding of it. And then you're going to have your platform that's in the combine that you can study. You're going to have people in the Facebook community, and there's a whole range of things. So it's kind of up to you what you want to do. I know me as a trader, I dove in and soaked up everything like a sponge, and that helped me. Some stuff you don't remember, but I know it's good for me. I know I took it in, I processed it, and it helped mold who I am as a trader. It helped me make better decisions. It helped me know what not to do. It helped me know what I could do. So all that stuff was so beneficial. Topstep provides a lot of that. We work with a lot of educational affiliates. So if there's something you want more, maybe we could point you into an affiliate that we verify, because there's a lot out there. And we work with people that we know that what they're teaching is to teach a man to fish, not give a man to fish, because that's a longevity game. So there's a lot that you can do. But in the end, our greatest gift that we can give back is to help experientially learn how to become a better trader. We're going to improve upon that as the months and years go by.
Awesome. Thank you, Michael. Next question we got here. There's been a lot of chatter in the Facebook community, and I'm just curious if you can provide a comparison between the pro account and the funded account, why someone would choose the pro account.
Well, first, the option is yours. So you can choose a funded account right out of the gate, but the pro account saves you on data, gets you an account right away, and then it unlocks a premium funded account, which is a $5,000 starting balance rather than a zero starting balance on the funded account. What that does for you, that's up to you. But it allows you more room. It allows you, again, to have winning days, have those 5 winning days, take 50%. There you go, $2,500. Take it all out. So yes. So that's the difference. I mean, the difference again is the benefit that you see when you get that fork in the road, when you pass the combine, pass step 2, and you say, congratulations, Danny. Here's 2 options for you. Pro account, let's get started right away. You don't have to pay for platform fees. You don't have to pay for data fees. And you unlock a $5,000 starting balance.
You've got much greater risk and a little bit more room and some more cushion, because we all know the second you go live, things get a little different. The fills are slightly different. You guys know that. We all know that. And then big changes up here.
Yep.
Big
it's a smooth segue into live trading.
Absolutely. Okay. Just a couple of things I want to touch on really quick. I know we've got a lot of questions about Sierra charts. As you guys know, that is something we've been talking about for a while. We had them, they left. I know they're back on Rhythmic. It is something we are looking into. So, we'll keep you posted on that. I don't have much more information than that. Stacking Bananas. I know you're asking about the 2% rule.
What's the name?
Stacking Bananas Trader.
I love that name. Stacking Benjamin, stacking bananas.
Right?
I like it.
I know you're asking about the 2% rule. I'll kind of just break it down really quick. It's for those that are in the live market. It's not 2% of anything. It's 2% from the lock limit down. So NASDAQ, if you're trading NASDAQ, lock limit down in that market is 7%. If we get within 2% of that, so that means NASDAQ is down 5%. We're going to require our funded traders or live traders to be flat.
The last
we just
time
don't want to get caught.
Yeah. Sorry to cut you off, Danny. The last time we saw that, March last year, and that's when everybody thought the whole world was coming to an end, and the markets were very much showing that. And everything was open on the next day, lock limit down. The open the next day, lock limit down. I mean,
and then you watched during pre-market too. You'd watch the market continue lower and lower, and it would open up at the new trigger, lock back up. I mean, and if you're stuck in a position, thank God I wasn't doing much there. If you were stuck in a position, I couldn't imagine the anxiety. I'd be sweating through like 18 shirts, getting stuck in something like that, not knowing what's going to happen. So,
I mean, the whole country was sweating. 401ks did not look good around that time either.
And then we ended up the year over like up 10% on the year. Pretty wild. All right, next question. I like this question, Michael. With a lot of the changes that are going on, what are some of the steps Topstep's willing to do or take to incentivize traders to build a long-term relationship with us?
Well, I think when you get to the funded level, you can expand your risk. You can expand your buying power. We have individuals that reach out and said, hey, I want to trade instead of 5 lots, I want to trade 7. Instead of 10, I want to trade 15. So there's that. Our whole goal is that's one of the reasons why we want to keep people at the funded level. There's no going back to the combine if you're excelling at the funded level. We want to keep you growing at the funded level. We want to keep, hey, what do you need? I'm just fine trading 2 lots. Okay, fine. Just checking in. Looks like you're trading really well. Or you reach out and say, hey, I'm looking for a little bit more buying power or downside. And if you're struggling, we're gonna have a conversation. We're like, well, is that really something you want to do? If you built up your account and it's really well and you're on a cold streak, we're just gonna talk to you. But in the end, we're like, hey, you built up your account. Let's open it up. but just remember you've been on a little cold streak. So there's individuals that out there are performance coaches and whatnot that will help you, and you can reach out to them, or there are times where we typically reach out when you're having a really great day. Hey, keep that in your pocket. It's, again, we're always going to be helping you keep money in your pocket. I've seen people up $5,000. I saw a couple, yesterday or something, up $5,000 in a day, down 1,000, up 4, down 900, end of the day, down 900. Like, we want to help those traders book that 5,000. Hey, Danny, you're trading really well. Keep that $5,000. Why don't you call it a day? I know I got a little bit of an addict as far as trader, where I always had to be trading. Over trading can kill us. We know that. You guys probably did that either in your personal account or in step 1 or step 2, or hopefully not at the funded level, but it happens. So we're going to jump in. We're going to help you out where we can help you out on.
Awesome. Thank you. I think that's super important, right? Recognize when you're in a profitable day, you want to lock some of that in. And also, one thing to keep in mind too, if you're staying with Topstep, you're not at the risk of, even if your trailing max drawdown is brought to that 0 mark, you're not at the risk of margin calls or those, hey, market locks down. You're not going to get stuck in that, or the bottom falls out or something wild happens. That risk is taken on by Topstep. So just a couple of things to note there as well.
I know a lot of people. I still know them, still on text groups with them. I hang out with them. They wanted to be backed by prop houses. They like the buying power. They like the loss limit. They didn't like having their own money as far as at risk in all this. And there's other individuals that don't. Now, I loved it. It helped me get on my feet. It helped me. I mean, I was there for quite a while at the prop firm, building my account, taking money home, paying off things, all that kind of stuff. And then there was a certain point where I'm like, okay, I got a really good groove. I got a really good cushion. I paid off a lot of my stuff in the back that got me to this point. And I put enough money away. I'm going to go out on my own. So this is a process. This is a journey. I think a lot of people can go, I can just go out on my own right away. Yeah, sure. You can go open up an account, but that account, if you don't have the experience, if you don't have the skills we talked about earlier, it's a very expensive trading tuition to lose.
Awesome. Thank you. Just one, I know there's a question out there. I want to clarify how the trailing max drawdown works in that funded account. So at the end of every day, we go through, we update where your trailing max drawdown is based on your end of day P&L. So wherever you are at that day, we'll calculate your trailing max drawdown then, and then you can trade the next day. It's not based off of some unrealized P&Ls, which I know some other places do. That's not how we do it. It's not based on your high water mark of the day. Nope. It's calculated where you ended of the day. And that's how we calculate your trailing max drawdown there. Okay, Michael, next question. It's a common one I've gotten here. And then I got another great question that came in through the chat, but a different one that was emailed in was asking about micros. What's going on there? They want to trade more micros in the standard accounts. I know we've talked about that, but what's going on?
Well, I told you we're working on cool stuff. We're working on some cool stuff. It's let's just say it's bigger, but it's still micro.
What's coming. I'm excited. It's one of my bigger, most exciting things that we're doing. So please pay attention to that one. That one will be great.
Micros, we're it's top of mind, top of focus, and we're building something that really targets the individual and style of micro trading.
Awesome. Thank you. Now this question I really like. Full-time workers, how do they manage to participate in Topstep while holding a full-time job? What are some of the contracts that they can trade after work?
I've seen the great question. I've seen a ton of full-time folks, and I would always encourage anybody, stay full-time and find windows that you trade in, but you stick in those windows. Like if somebody goes to work at 11:30 because they're a chef or something and it doesn't open up till 2, well, I don't know. I'm just throwing things out there, or it's a gig. You drive for Uber or whatever, your work schedule, just working around your work schedule. There are windows of opportunities, whether it's 2 a.m, when the European markets start to open, the U.S. markets start to open at 8:30 Chicago time, 9:30, of course, and find your spot. Find your spot. Get used to that trade around that spot. The days of sitting there all day long is not. It's not anything that I think you should do, or I would recommend, or that I've seen traders, because you get like mush brain. What's it called? Where you like watch something all day long and then nothing's happening, but you're like, it's setting up to go. Well, what if it's not? And you're going to try to trade it right now. So find your window of opportunity. That's the part that takes discipline as well. So you don't overtrade. So you don't start perceiving things that don't exist as a trader. So find that time, keep your day job until you really start to find that groove. Again, I was a bartender at night. I got done trading, and then at 5 o'clock, I'd go open up the bar and I'd work till 2, and then I'd be in there at like 6:30. So that was, I mean, those nights that I worked a lot on the weekends though too. Yeah, it sucks for lack of a better word, but that helped me not have the pressure of, I got to make money. So that's the balance. Again, as traders, you got to protect your mind and your psyche and your confidence. Find that sweet spot of trading. There's the timid, there's the over cocky, where you think you know everything. There's a sweet spot right here that as a trader, you got to protect. So whether that's having your job, keeping your job, or trading around your job, that's for you to find. And the great way to do that is find that in the combine while you're being evaluated.
Absolutely. And a couple of products you can look at that have some volatility and activity in the overnight session. Crude oil really picks up when the London session opens up. So you can always check that one out. Currencies, foreign currencies, they tend to move a lot in the overnight. Euro has been extremely active in the overnight session and fading out during the regular US session. So check out some currencies, check out crude oil, things like treasuries and equity markets. They're going to be relatively flat. They are very based on what's going on in the U.S. News doesn't really come out until markets open up. So I would look currencies. I would look crude oil.
So top three, Danny, because I think it's great that you're suggesting this, because these are things that move at night. And if you work at night, then I would definitely trade the morning session. The morning session is golden, or the close. The last hour or two is very good. The first 2 hours is I love it. And then by 2 hours into it, New York's going on lunch and things kind of slow down. I get back to Topstep work or go for a bike ride, or in the winter I'd go for go skiing. Some people go work out, some people meditate, some people walk the dog. So you do not need to be sitting in there all day from open to close. Find your spot and then find out how it works around your other income generating business.
Awesome. Thank you. All right. Just a few more questions and we're going to go ahead and sign on out of here. I like this one, Michael. What style of trader tends to make up the majority of funded traders? Quick scalpers or traders that are looking to make the bigger moves?
It's not quick scalpers, because that was one of the data points that we gave you guys, because we saw a lot of these quick scalpers don't do well. The majority of the millions that we processed last year, 5-minute holds to 20-minute holds. I'd say on average. Of course, you get the individuals that hold for hours, but I'd say between 5 and 20 minutes of hold time is a big one. So also putting up consistent days that they don't have huge fluctuations. So that's a style that I see. What does that mean? You have an $800 day. Your next day, you're down 400. Okay. Your next day, you're up 300. The next day, you're down 200. The next day, you're up 800. That's a lot better that I've seen. That somebody's like, I'm up $5,000. The next day, I'm down. I hit my loss limit. Or these huge swings. It takes a lot for your mental capacity to handle big swings and to do it well time and time again. So trading smaller, be 1 to 2 lots, 3 lots. Those type of traders I see are the best, because they are the Chipper Jones, I call them, of trading, where they just go out there and chip away, get base hits. But they say base hits win ball games. We always like to do a lot of baseball analogies. They go out there and consistently perform. And then if they have a cold streak, which every, again, ball player gets, trader gets, they can weather it. They either take a little bit of time off, call it a day, call it a week, and then they come right back at it. And sometimes when you have a cold streak, they come right back at it and they trade smaller. And then they get back up to a certain point. So to each its own, but what I've seen is those that type of style. And a lot of people are ES traders, NASDAQ, gold, crude oil. So those are the products that are most widely traded from the funded traders. And that's pretty much style, call it hold times, risk reward, at least 1-to-1, because, you know, you got to be 50% right on that one. Having a high win rate is hard to sustain. Again, I've seen it, but it's hard to sustain. We're talking about consistency here. We're not just, hey, how'd you do for the week? And then you're done trading your entire life. This is a longevity game.
All right, Michael, thank you. And one last question. It's a quick and easy one. How many funded traders do we have, or have we had this year? I think we did over 6,000 in funded traders we had in 2020. This year,
I don't know what the count is this year on how many we have total that we've done. I don't have that. I know it keeps adding each month.
Yeah, and I think
so we have the weekly kick, or not weekly, sorry, the monthly. What is it, Danny? The monthly highlights and
monthly highlights.
Yeah, so check that out. That comes out each month. Talks about the traders that are putting up, are stacking bananas. That are stacking bananas and putting up money. 5K club, one that all the traders that have put up $5,000 become like this quote unquote 5K club and get recognized. And we give numbers of how many people every week. We give numbers of how many people pass step 1, step 2, and at the end of the month, I think we total that.
Yeah, I think so. And one thing I did want to mention, I forgot to mention it, but on the question about working a full-time job and trying to trade, there's an awesome interview I did with a funded trader named Magnum. He trades from his skid loader on his cell phone. Now, I wouldn't sit here and recommend trading on your cell phone, but it works for him. He's done extremely well. Go give that video a look, maybe even after this. Other than that, Michael, I appreciate you sitting down with us here today. I appreciate everyone dropping questions. Like I said, I know we weren't going to get to everything, but that doesn't mean we're not going to answer them. So ask us in the forecast, ask us in the recap, ask us in Coach's Playbook. We are live. We're here for you. So please do not hesitate to reach out to us. And don't worry, Michael will be back with us. This isn't the last Q&A. We got many, many more to come.
And Danny, was there any questions about us having the exact same shirt? Because I thought that would be something.
You know, I was gonna open it up. We have the same stylist shirt. I almost put on the same hat. We got the same color shorts on. Great minds think alike.
Right. Hey, thanks for doing this, Danny. Thanks for having me on. Everybody, as always, trade smart. Always trade for tomorrow. That goes back to the discipline talk. Always be trading for tomorrow. Take care, and hopefully we're going to be on here a bit more on these live Q&As. So either send in your questions or hold your questions till we have these and fire away, and we want to answer these in the most transparent way.
Awesome. Thank you. All right, everybody. John will be back tomorrow morning, 8 a.m. Central Time. So until then, stay safe, wash your hands, trade smart. I look forward to seeing you guys in the markets. Take care, everybody.